Imagine living in your parents' $350,000 house in a quiet part of town, sitting in your bedroom every day and making millions of dollars in minutes. Well, this is exactly what 31-year-old Navinder Singh Sarao, better known as Nav, was doing from the comfort of his home. Nav was born in November 1978 in England, in a place called Hounslow, located in the suburbs of West London. He lived with his parents and 3 brothers, a stone's throw from the iconic London Heathrow Airport, and under the constant hum of planes taking off and landing. Nav was diagnosed with Asperger's syndrome. Whilst this made him vulnerable to the harsh world outside, he was a gifted individual with a photographic memory and an uncanny ability to quickly perform mental arithmetic. By the age of 3, Nav was able to multiply large numbers in his head. In school, Nav was extremely intelligent, often obtaining top grades in exams. Even though Nav was very smart, he was also cheeky in school and found schoolwork easy. He would often arrive late to his exams, but would pass them with flying colors. Nav had an insatiable love for football, regularly playing with his friends in the local park. Nav was a supporter of FC Barcelona and was in awe of one of the greatest footballers of all time, Lionel Messi. Nav also loved playing FIFA online and mastered the game. He would test his skills against some of the world's best FIFA players and would often beat them. Nav's abilities, coupled with his commitment, ensured he was successful in anything he tried his hand at. Nav graduated from university in 2001 with a degree in computer science and maths. After graduating, Nav hopped from one job to another, often ending up in telesales. While in university, Nav had little money. However, one of his friends appeared to be flush with cash. When Nav asked his friend how he could afford luxury items all the time, Nav's friend responded that he was trading. This was the initial spark that piqued Nav's interest in making money through trading. In 2003, whilst in a period of unemployment, Nav responded to a newspaper ad placed by a company called Futex. Futex was a small company with big dreams based in Surrey, approximately 1 hour from central London. The ad placed by Futex invited applicants who were motivated, work well under pressure, and keen to learn. The recruitment process was in 3 stages. First was a mental agility test, followed by a psychometric exam, and then a verbal and reasoning exam. Following the tests, a face-to-face interview was conducted. Nav was unimpressive during his interview with Futex. He arrived late, was unable to maintain eye contact for long, and would often use London slang to respond to questions. However, Nav had passed the tests with flying colors. He was like a human calculator, and he impressed Futex bosses with his ability to do mental arithmetics within seconds. Despite concerns about Nav's perceived lack of personality, Futex decided to give him a chance. Futex had a very uninspiring office with an outdated decor located above a supermarket. The entrance to the office was located at the back of the building. The senior management team at Futex would regularly drive their luxury cars into work. This was a tactic used to show the young recruits what could be achieved with hard work. The job description was simple for newbies. Futex provided the capital to invest, and the traders would pay $1,700 in monthly desk rent. Any profits made after paying the rent would be split 50-50 with senior management. Nav's colleagues at Futex were all middle class, and most were privately educated. His colleagues had never interacted with someone like Nav, a boy from a working-class background who spoke in London slang. Around the office, Nav was commonly known as the Chav. Within a short space of time, Nav became the star trainee, with many colleagues liking his ability to understand financial markets as something out of the Matrix. Nav once said, quote, "An individual with a mind like mine does not require a calculator." Nav quickly started making thousands of dollars in profits. Unlike his colleagues at Futex, Nav was not one for flashy cars, watches, parties, or suits. Many of his colleagues pointed out that he wore the same casual tracksuits almost every day, drank pints of milk at his desk, and would often arrive late to the office simply to avoid having to pay for a more expensive train ticket during peak hours. One of his colleagues once said, quote, "Nav only loved making money, not spending it." When others asked Nav how he spent the vast amount of money he was making, he told everyone that he owned a Lamborghini. In fact, Nav had a moped with a Lamborghini sticker on it. It wasn't that Nav could not afford a luxury car, it was the fact that he was simply not interested in materialistic items. One Christmas, an office party was arranged at a swanky club in central London. Everyone was told to dress up. Nav turned up in his tracksuits and trainers and was refused entry. He eventually sneaked in through the back entrance. When Nav would get into the office, he would sit at the back with his hoodie pulled up. For lunch, he would eat discounted supermarket sandwiches. On some days, Nav lost tens of thousands of dollars. However, unlike others who lost significantly less and would scream and shout in despair, Nav was emotionless. No one had the faintest idea whenever Nav was either making or losing huge sums of money. When others went to the bar after work, Nav would stay in the office, glued to his screens, watching and waiting, like a lion waiting for the right opportunity to pounce on its prey. Many of the traders would sit in front of 6 to 10 computer screens. The more screens you had was seen as an indicator of how successful you were. However, Nav went the other way, setting himself up at the back of the office with just 2 computer screens. Nav had little care for the world economy or business outlook. He was a scalper, someone who goes in and out of trade positions hoping to make small profits each time. The most important tool at Nav's disposal was something called a ladder. The ladder shows the trades entering and leaving the market. It provides an invaluable view of the market supply and demand and allows traders to make informed decisions. By now, Nav was making a lot of money, on some days as much as $20,000 in profits. But he was also taking a lot of risk in the markets, often placing orders of up to $7 million. Many at Futex were uncomfortable with Nav's risk-taking. However, he seemed to have an extraordinary talent for making money. Nav was one of few who seemed unbothered about losing money. He once said, quote, "It's not like I'm losing an arm or a leg." Between 2003 to 2007, Nav had amassed a $400,000 war chest. However, it was not all about being unbothered for Nav. The boy from a working-class background was keen to get recognition for his talent. Just after his 29th birthday in 2007, Nav sent an email to a magazine publication, Traders Monthly, insisting on being included in their 30 under 30 list of top traders. However, Nav never did make it into the publication. Nav also joined an online trading platform where he came across as an arrogant and dismissive person, often blasting other traders and boasting about his trading records. His profile picture depicted the Joker, with the caption, "Winning." Losses do occur, but only as often as the World Cup, which takes place once every 4 years. It was a far cry from the reserved person who sat at the back of the Futex office. Around 2003, in the midst of the Iraq War, Nav made an online post predicting impending terrorist attacks in the UK and US, which would bring an opportunity in the markets to make money. Other posters on the platform found Nav's comments distasteful, and he was blocked from posting. After a period of silence, Nav returned to the online trading platform and posted, quote, "Come back to your master, O herd." No one responded. 2008 witnessed a historical global financial crisis, with major corporations such as the Lehman Brothers collapsing and many others desperately seeking government bailout. At the same time, Nav was still at Futex, and amidst mass panic and unemployment fears, 2008 turned out to be a monumental year for Nav, and he was about to write his name into the history books of Futex. As markets tumbled, Nav's analytical eye identified buying and selling behavior in the German stock market index, known as DAX. Nav noticed that, during the day, the DAX behaved like most of the other markets across the world, where panic selling was rife. However, every night, it would start rising before stumbling the next morning. Nav realized that this pattern was not being picked up by the mass market, and he decided to risk it all. Within 2 weeks, Nav constantly bought and sold in the German markets, taking advantage of the buying and selling behavior. In a matter of weeks, Nav had made $1 million. As it turns out, in Paris, a French trader was desperately buying overnight in the hope that the markets would rise the next day. The trader, working for a French investment bank, had invested $70 billion without authorization and found himself in a desperate situation as his trading positions were battered down during the 2008 financial crisis. The French trader ended up losing $7 billion of his employer's money and was sentenced to 3 years and ordered to repay the whole $7 billion. The biggest fine handed out to an individual ever. By mid-2008, after 5 years, Nav had outgrown Futex. He became disillusioned as his profits, earning millions in the markets, were having to be split with the senior team. Nav was coming into the office less and less. Whenever he was present, there was tension in the air. When Nav decided to leave Futex, he was due $3 million from his trading. Nav threatened legal action when Futex requested Nav to accept payment in installments. Nav received his full $3 million and left Futex on bad terms. Nav decided to set up shop from his bedroom, and the best was yet to come for Nav. He lived for trading and had no social or love life of note. Nav would trade the US markets between 2 p.m. to 10 p.m. UK time, then go to sleep around 3 a.m., waking up the next day at midday. This was the peak of the financial crisis, where fear loomed large. For people like Nav, this was the perfect opportunity to take advantage. Nav's bedroom was almost childlike, a single bed and posters of his favorite footballer, Lionel Messi, on the wall. At the foot of his bed was a desk with 3 computer screens and a cable which ran into a wall socket, giving him access to the internet. It beggared belief that Nav was about to make millions of dollars from this simple setup. In November 2008, during the peak of panic in the world financial markets, Nav invested all of his $3 million into the markets. At a time of uncertainty and fear, Nav saw an opportunity. Nav banked on the US government coming to the aid of the big banks. Surely the US could not afford to see its banking institution collapse. Nav took a gamble on the market's value rising and invested all of his $3 million. For the next 2 weeks, the markets rallied after the US government's cash injection. Almost 14 days after Nav put all of his $3 million on the line, he sat in McDonald's drinking milkshakes in celebration. Nav had just turned his $3 million into $15 million. In a matter of weeks, Nav had made more money than most seeing in their lifetime. However, Nav never told his friends or family. They never suspected him of being rich, since Nav never showed off his wealth. Anyone who makes such a vast amount of money dreams of buying big houses, nice cars, clothes, and going on luxury holidays. However, Nav was not happy. Nav felt cheated by the banks and hedge funds. He felt these institutions were preventing everyday people from building wealth, as the institutions were employing state-of-the-art, lightning-quick machines to stay one step ahead of the ordinary folk like Nav. Nav believed he was competing against machines, and it was not a level playing field anymore. The banks and hedge funds had invested tens of millions of dollars into machines that were now deploying a technique known as high-frequency trading. Do you ever wonder why the world's biggest banks and hedge funds are able to make billions every year in the markets, and you can't? Well, that's because they often use highly expensive and sophisticated software to execute millions of automated trades through high-frequency trading. So, how does high-frequency trading work? Let's say you try to place a $1 trade for a share. As your order is about to be processed, the big banks and hedge funds deploy a software that detects rising demand for that particular share. So their lightning-quick software will buy the share for, say, $1, 1 cent before you can. Then they will offer the share to you for $1, 3 cents. Now multiply this behavior by millions every single day, and you can see how much money these institutions can make by having better and quicker technology than you have. The fear for people like Nav was that robots were going to take over and force humans out the game. There is an old adage that in the future, trading will consist of three things: a man, a dog, and a robotic computer. The man's job will be to feed the dog, the computer's job will be to trade, and the dog's job will be to bite the man if he ever goes near the computer. Nav contacted the financial market authorities on several occasions trying to highlight the unethical practices of high-frequency trading that was being conducted by the big financial institutions. However, he was repeatedly ignored. Fed up with the authorities, Nav decided to level the playing field. Nav wanted to get one over the multi-billion-dollar companies who are always one step ahead of the individual trader, thanks to their ability to buy and develop some of the best software in the world. In 2009, Nav, with the help of developers, decided to create his own software with an added twist. Nav's software would lure the big investment firms, using fake orders as bait. Nav's desire to beat the banks and hedge funds became an obsession, so much so that he started delving into unethical and illegal practices. Nav would first make a genuine order and buy, let's say, a trade of $100. He would then make an order for a further $1,000, which he actually has no intention of buying. When the banks and hedge funds' technology would see rising demand, their lightning-quick software would start buying, meaning the price would rise. However, as the price rises, Nav would quickly cancel his $1,000 buy and instead sell his original $100 buy for, let's say, $103. These sorts of transactions would be happening in milliseconds. Nav was also employing a method he called back of queue. As Nav's order approached the confirmation stage, his automated software would buy one additional contract. This would then take Nav to the back of the queue. Through this method, Nav could place huge fake orders without them ever hitting the buy price. This trick was employed by Nav time and time again, and before the investment firms knew what was going on, Nav had disappeared with his profits. Through this tactic, on one day, Nav made $1 million. On another day, Nav made $4 million. By this time, Nav, working alone from his bedroom, was placing bigger trades than most of the world's biggest investment arms. It's safe to say that Nav was doing well for himself. His software was working almost perfectly. I say almost, as on one occasion, his unusual activity of placing and canceling orders was detected by the authorities. However, instead of this detection turning into a serious investigation, Nav was simply sent an email by his brokers who gave him a warning. Nav explained away his activities by apologizing and telling his broker that he was demonstrating to a friend how to trade and did not intend to place a live order. The 6th of May 2010 started off as any ordinary day for Nav, much like before he awoke late in the day. The previous day, Nav had banked $400,000, more than the value of any house on his street. 2 days previous, Nav banked $800,000 in a single day. Whilst the 6th of May 2010 was just another day for Nav, there was mass panic in the financial world. Countries such as Greece were in the brink of bankruptcy. Murmurs were raging of public mutiny and violent protests, as the average man and women were desperate to withdraw their money from banks out of fear that they would be locked out of their savings. Nav turned his computer on at 3:20 p.m. UK time, 9:20 a.m. Central Standard Time. As he watched the frenzy unfolding in the world, particularly in Europe, where there was a real fear that countries such as Spain and Portugal were also on the brink of collapse, Nav decided to play his tricks again. Adding to fears of a tumbling world financial market, Nav placed a 200 million fake sell order to exasperate the market panic further. Nav banked another $850,000 on that day before logging off his computer at around 8 p.m. UK time. It was a good day's work, but not even Nav could have predicted what was about to happen next. Off the back of Nav and many others selling all through the day, the fear in the US markets took a dangerous turn. Within minutes, the US markets started to crash. Market participants were in a desperate position of trying to sell and protect their money. The world oil market followed the US markets and started to fall, and for the first time in history, the financial market from China to America stopped working. As the financial systems froze, the banks, hedge funds, and individual traders watched in horror. Nobody knew what was going on. $1 trillion had been wiped off the markets. The somber reality was that many individuals, no different to you and I, ended up losing thousands of dollars in the markets. Nav took the next few days off as the world needed to come to grips with what was happening. The aftermath of that fateful day was littered with rumors. The US government demanded answers from the regulators, who were shocked to see a sudden $1 trillion drop in the markets. Rumors were awash of inexperienced traders to hackers and terrorists, causing mass panic across the world markets. Others blamed the rise of robots and high-frequency trading, accusing technology of going haywire. Although there was uncertainty on what caused the crash, one thing was certain: no one was pointing the finger at the man sitting alone in his bedroom in his parents' house. Following the historic day, the market started to rise from its lowest levels, and some sense of normality resumed, albeit with the world recession still making the headlines. While the US regulators, banks, and hedge funds were still scratching their heads and trying to figure out what happened on 6th of May, Nav was back to using his software and making money and disappearing. In August 2010, Nav had one of his best days, banking $4 million in a few hours. This no longer became about money for Nav. This was now about beating down the financial institutions and taking away their profits. Now you may expect that the financial regulators, the FBI or New Scotland Yard, identified Nav as a market manipulator, which led to his arrest. The truth is that Nav's downfall was sparked by pure bad luck, something that not even Nav could have accounted for. The irony of it all is that the person who first came across Nav's practices in the markets was just like him, an individual trader trying his best to compete against banks and hedge funds. This person is protected by US whistleblowing laws and has never been identified. For reference, we shall call him Trader S. Like Nav, Trader S had developed his own software to compete in the dog-eat-dog world of trading. During the weeks leading up to the flash crash on May 6th, Trader S had been working diligently with some developers to enhance his software. Once his software was ready to be used, Trader S decided to perform some testing to double-check that everything was working as intended. By pure stroke of bad luck on Nav's behalf, Trader S had randomly chosen the day of May 6th to perform his testing. At the same time, the global markets were experiencing monumental losses. Fortunately for Trader S, he had decided to sit on the sidelines on that fateful day and complete his software testing. Whilst testing and simultaneously watching the market panic, Trader S spotted unusual activity whereby orders were being placed and quickly moving to the back of the queue and never hitting the buy price, creating a false sense of demand. Trader S inquired with some of his friends to try and get their views on what he had detected. Most agreed that it did not make sense why someone would trade such large volumes and deliberately move to the back of the queue with no intention to buy. After all, if you do not buy, you cannot sell for a profit. Trader S came to the conclusion that this was a clear case of market manipulation and something nefarious was at play. The thing that put doubt in Trader S's mind was why had no one else been able to pick this up? By now, the US President's office had demanded an investigation. The financial authorities created a task force to conduct an investigation, and millions were spent on some of the best consultancy services money could buy. And yet, no one had found what Trader S had found. It was baffling. On one weekend, Trader S was reading a New York Times article on another trader who had blown the whistle on some shady trading practices being performed by a company he was working for. The company was found guilty and fined almost $3 million. The whistleblower was rewarded up to 30% of the penalty fine. This motivated Trader S to contact a lawyer and file a whistleblowing declaration to the financial authorities. Trader S imagined his discovery would ruin the reputation of a major bank or a hedge fund. Never in his wildest dreams did he think that in reality he was going to bring down a lone ranger working from a bedroom in the suburbs of London. Once the whistleblowing incident was received by the US financial market regulators, they reviewed the dataset provided by Trader S. Through analysis of the dataset and tracking of records, the authorities were closing in on Nav. The authorities identified that the suspicious trading activity was coming from a small company called Nav Sarao Futures Limited, a company established in the UK with a sole director. When investigators went on Google Maps to search the company address, everyone was in for a shock. The office was not in a plush location in central London or in the financial district of Canary Wharf. The company address was in fact a little semi-detached house based in Hounslow, West London. For months, the authorities covertly investigated Nav, speaking with his associates and brokers and tracking his assets, unbeknownst to Nav. As Nav was not a US citizen, this meant that an extradition request would have to be made to the UK. The FBI got involved in this investigation, and a court judge signed off on the case against Nav. Almost 5 years after the flash crash had occurred in 2010, the net had finally closed on Nav. He just hadn't received the memo yet. On the 21st of April 2015, 5 years after the flash crash, on a cold and wet Tuesday at 8 a.m., the London Metropolitan Police burst through Nav's parents' home. The images of several police officers descending on the Sarao household was shocking for the neighbors, who could not have imagined their sleepy suburban street would become the focus of the world. When the police arrived, Nav was fast asleep. Upon hearing the commotion downstairs, Nav got up from bed and found the police at the bottom of the stairs. While Nav's parents were oblivious as to what was going on, Nav immediately knew the game was up. The police had found a very simple setup in Nav's bedroom, with a desktop computer with 3 screens and wall posters of footballer Lionel Messi. The officers could not believe that the world financial markets was brought to its knees from inside such an inconspicuous bedroom. While Nav knew exactly why the police were arresting him, it appeared that he did not register the seriousness of his arrest. This was evidenced by the fact that, as the police escorted Nav into a waiting car, he asked one of the officers whether he could quickly go back to his room and record a football match that was taking place in the evening. Nav presumed he would be back home in a matter of hours. Nav spent one night in a jail cell before standing in front of a judge. On the day of his hearing, the courtroom was packed with journalists, desperate to get a snap of Nav and identify the man who wiped off $1 trillion from the markets. In court, there was a hushed silence as everyone waited for Nav to enter the courtroom. The media expected a hotshot city boy in an expensive suit to burst through the door. A murmur could be heard in court when a small and timid Nav walked in as the defendant. Nav looked anything but the man the media could have pictured accused of such a crime. The judge granted Nav bail on condition of him not trading, putting up $5 million, and his parents providing an additional $50,000. Nav was relieved that he could at least go home instead of being around violent prisoners. However, things quickly took a turn when the US froze all of Nav's assets, resulting in Nav being unable to make bail. This meant that Nav would have to spend the next 4 months in Wandsworth Prison, southwest London. The US authorities asserted that if Nav was given access to his funds, thought to be in its tens of millions, Nav may be a flight risk. With access to such vast sums of money, Nav could disappear. Before his arrest, Nav had amassed a fortune to the tune of $60 million. In order to avoid paying a large tax liability, Nav, with the help of his advisors, had invested his money in different schemes. When his lawyers attempted to retrieve monies from investments, they quickly found that people had been taking advantage of Nav and had squandered most of his fortune in bad investments. Nav was finally released on bail in August 2015. The judge accepted that, although Nav had made a lot of money, it was a very difficult task to retrieve the funds in a short space of time. The judge accepted the $50,000 from Nav's parents. Nav was a free man until the outcome of the extradition process. The public was split over Nav's arrest. Some thought of him as a criminal who cheated the markets for his own gain. Others saw him as a hero, sticking it to the banks and hedge funds who use high-frequency trading to win over the average trader. Others accused the U.S. authorities of targeting Nav, as they knew it would be much harder to prosecute those in Wall Street for also playing their part in the crash. Nav was finally extradited to the U.S. in November 2015, 7 months after his arrest. By now, the U.S. authorities even started to feel sorry for Nav. Whenever they have gone after other market abusers, the defendants have usually been arrogant and brash traders. But here was Nav, extremely timid and down-to-earth. Nav was facing 22 charges and a maximum prison term of 380 years. The odds were against him as the evidence mounted up. In a last-ditch attempt, Nav's lawyer recommended leniency for Nav if he helped the U.S. authorities to fully understand the technicalities of the markets and how to spot future market cheats. This was going to be invaluable to the authorities, to learn and understand from someone as competent as Nav. Coupled with the facts that they started feeling sorry for him and Nav had not lived a life of luxury when he made all that money, the U.S. authorities agreed to the deal and did not pursue a prison sentence. Nav had the added benefit of being allowed to return home and help the U.S. authorities from the U.K. Nav is no longer allowed to participate in the markets in any form. Although he made almost $60 million, most of this was lost by Nav through fraudsters and Ponzi schemes. Following the end of a traumatic 5 years since his arrest, Nav said, quote, "I spent 36 years trying to find happiness on a path built on a lie. I did the things society says will give you happiness, and when they didn't, I didn't know where to look." So, what do you think? Was Nav a hero by taking on the world's biggest banks and hedge funds? Or do you view him as a criminal whose cheating affected millions of innocent investors and helped to wipe out $1 trillion from the financial markets? Please subscribe, like, and leave a comment. I would love to hear your thoughts. I will be making more videos on interesting crime-related cases, which I hope you will enjoy. So, until next time,